You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music means it is time once again for Interview Tuesday on our network, where we welcome on guests from throughout the world of options and derivatives and indeed beyond to proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network, reminding all of you, if you like what you hear, this show, anything else that we do here on the network, nearly a dozen programs coming at you these days. Keep rating and reviewing. Really does help the sea of new listeners that are discovering the world of options. Also discover the content out there. Of course, keep those questions and comments coming too. We do love to hear from all of you out there. And it is that time of year, listeners. It's time for the annual Options Industry Conference. This is usually the time when I schlep on down to wherever the event is being held, and I lock myself in a room for 2 or 3 days, and I have a legion of interviews that we bring to you folks here so you can get the lay of the options land, see what's going on out there in the options industry from an exchange, from a broker, and most other perspectives out there. Can't really do that this year because the event is still virtual. So we thought we'd do the next best thing and bring on a nice rotating slew of guests here for you folks to enjoy, representing a variety of different perspectives, including our next guest. He is a newcomer to the program and indeed to the network. He is Richard Ho, the head of retail equity derivatives at the Montreal Exchange. Richard, welcome to the Options Insider Radio program.
Hey, thanks, Mark. Thanks for having me on the show.
And Richard, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the options and derivatives space, as well as what it is that the head of retail equity derivatives does day to day over there at the Montreal Exchange.
Yeah, okay, sure. That sounds good, Mark. So, ever since I was back in CEGEP, and for the sake of your audience who's not from Montreal, Quebec, CEGEP is like a senior high school pre-university level where, my professor from economics brought me into the one of these school trips, which happened to be at the Montreal Exchange. And ever since that trip, I said to myself, what, when I get to a certain stage in my life, I'm going to be working for the exchange. And ever since, believe it or not, I've been with the exchange for over 15 years. So, I've seen the business evolve from pit trading into electronic trading. And back then, on the second floor, there used to be this huge book where the shares of the exchange, of the Montreal Exchange used to be traded privately between employees. So that would be the book where you can list your shares for sale to other employees, and other employees would bid on them. So that's what I do, and that's how I started at the exchange. And over that, course of 15 years, I've been doing, different roles, mandates, and so on. And today, as head of retail equity derivatives at TMX, my day-to-day would be to liaise with approved participants regarding their online trading business. As everyone knows, that last year, retail investors' interest in education has skyrocketed. Most of the investors nowadays, they're very interested and very engaged at learning about what options are, how to generate additional income, mitigate any risk. So last year, because of the work from home situation, the exchange stepped up the educational offering with the online brokers. We delivered over 50 plus option webinars with them. We saw lots of success, tremendous conversion rates, by the way. And I also noticed that the OIC and one of my old friend, Ed Modla, if he's listening to the show, I really want to give him kudos and say, that he's doing a great job at educating retail investors as well. So in a nutshell, that's what I do at the exchange, and happy to give more answers.
Well, we love to see people supporting education out there. It still is an important pillar to the option space. You can probably argue now it's maybe more important than ever. The options market has seen such explosive growth, such explosive penetration beyond what anyone really imagined just a few years ago. And yet a lot of people are coming in, and we've certainly seen it. I'm sure you've seen it over there at the Montreal Exchange as well. A lot of these newer entrants maybe not as well versed in the options market. So anything that helps them learn more about it, I think, is definitely a good thing. Richard, one of the reasons we wanted to have you on today is most of our guests are based somewhere here in the U.S. So we've carved up the U.S. options pie in many different ways and in many different perspectives. We don't get a chance to get the Canadian perspective here on the network too often. So I think that'll be interesting for our audience. You kind of just gave us a glimpse of it now, what the pandemic has been like, but catch us up a little bit. What is the last year? Of course, 2020, an explosive year, and now here into 2021, equally, if not more explosive from a volume perspective. What has that been like over there at the Montreal Exchange, and what are you seeing in particular from a retail equity derivatives perspective, sir?
Yeah, that's right up my alley. When I speak with the online brokers in Canada, there's no doubt that in 2020, there was a phenomenal year across the board. When we talked about the Toronto Stock Exchange, the Venture Exchange, they both saw a tremendous increase in these small cap names, mining names, material names, you name it. There's lots of interest from retail. But you know what? When I speak with the online brokers, they all agreed that we need to upgrade the systems to support the amount of logins that they got during the mornings. In the morning sessions, people were logging in. They're very interested, engaged, and they were very nervous to see what's happening with the portfolios and whatnot. And here's a fun fact. IROC, which is our version of FINRA, they released a statement saying that in 2020, there were over 2.3 million new accounts opened during COVID-19. And Mark, guess what the adult population is in Canada? It's 30 million. So this means that close to 10% of all adult Canadians went to Russia and opened a trading account. I'm pretty sure that you saw the same thing in the U.S. as well, right?
Yes, the numbers have been, like I said, astronomical. That's probably more than 10%. I haven't seen the numbers broken down like that before as a percentage of population. I'd be curious to do that here in the U.S. and see what percent we have here, because you're right, it has been explosive, but I'm glad to see that the numbers have been pretty strong up there in our friends to the north as well. Now, it might surprise some of our listeners. We're talking about the Canadian perspective, but the Montreal Exchange also has a bit of a dog in the U.S. options market as well. Of course, you are a co-owner of the BOX, a.k.a. the Boston Options Exchange. So you have a piece of the U.S. options market. I'm curious from your perspective, Richard, you are an exchange operator. You're also a co-owner of a U.S. options exchange. Going into the lockdown last year, maybe it's just the cynic in me, but I was pretty certain we were going to see, just as you mentioned, kind of the issues with logging in and things. I thought we were going to see that writ large across the options industry as a whole. We were going to see massive outages at the exchanges, bad prints, all sorts of downtime with the exchanges. And we didn't see that. In fact, we saw almost exactly the opposite. Not only were the exchanges up and running, but they were thriving. They did record numbers of volume levels that no one really ever thought could be done, let alone in a completely electronic environment for the first time. And I'm curious for you, Richard, you've been around the exchange space for a while. Were you as surprised as I was that the industry not just survived, including Box, but actually thrived last year, Richard?
Yeah, Mark. So I'm very happy and satisfied to see the volume that Box has generated during COVID. And, with the new accounts that were opened back again here up in Canada, we're starting to see a net positive impact of this. With that tremendous increase of number of accounts, of retail accounts, going to the online brokers, lining up, waiting for their accounts to be opened. In Q1 this year versus the same period last year, we saw a jump of 21% increase in options trading volume. And that's from retail investors. Now, even on the institutional side, we saw that same increase. So the picture is pretty nice and rosy on both sides of the market. So when we talk about Box, it's a U.S. options exchange, but you have to recognize and remember that lots of these option classes, these option names, they're dual listed. So, for example, the BlackBerries, the lots of bank names, okay, they are dual listed. So they have options in Canada and also in the U.S. So right now, for the OIC, like the conference that we're going to be attending tomorrow and the day after, one of the most interesting sessions that I personally want to see and hear is the state of the industry. Because since 1/3 of all the option classes that are listed in the Montreal Exchange, they are also listed in the U.S. So whatever happens in the U.S., I think there would be some type of impact that could impact Canadian investors, users of Canadian options. So I really I'm looking forward to that session tomorrow with Henry Schwartz and his team.
Henry Schwartz getting all the plugs on the show today. This is the second person today to come on and say they were very excited. Of course, Henry does a great job. If you haven't seen them, listeners, we're going to pull all of the panel audio for you from the conference, put it out to our network. It might be kind of hard with Henry's because his is so visually oriented. Maybe I'll see if I could squeeze the slides from him as well so you could follow along. But his panel always chock full of data, chock full of interesting nuggets. But as you mentioned there, Richard, the health, indeed the state of the options industry. Speaking of the state of the options industry, one of the things that is very much on top of mind for a lot of people going to OIC this year is essentially kind of what you were just talking about earlier. This explosion, 21% of growth of accounts, 10% of adults in Canada have a brokerage account now. Obviously, that was driven by people staying at home and being forced to eventually trade during the lockdown. They didn't have much else they could do. One of the big questions coming into this year was, will that persist? Of course, so far, Q1, the answer is a resounding yes. March, the busiest in the history of the options business. January, number 2. February, I do believe, right around number 3. December is number 4. So you can pretty much draw a straight line month after month, more and more business. So at least so far, the answer is a resounding yes. I'm curious from your perspective, Richard, as you're looking at the Canadian landscape in particular, do you think this is kind of the new normal for the options business? This is new volume that's here to stay, or perhaps as we hopefully someday get back to some semblance of normalcy, will the volume also drop off a little bit as well?
That's a good question, Mark. Like, for example, do you hear an echo? Okay, no.
Nope, you're fine.
Yeah, Mark, that's a good question because options in the past were very perceived as a very complicated investment product to use and learn about. You got to learn first about the different option types and then the strike prices, expiry dates. But I think what this COVID-19 did is that it did some good to the retail investor community. It allowed them to go and learn from A to Z what options are. And once they learn how to use options, they have an extra tool under the belt inside the toolbox. Now they can use, options for speculative trades, directional trades. They can use it for, income generating strategies or even stock insurance. So once they acquire this knowledge, it's going to stay with them forever. So I think this volume that we saw last year and this year, it's going to somewhat sustain. It's not going to just disappear and go away. I think once you know how to use options in parallel to your trading account with your, ETFs and stocks, then you're going to start saying hey, if I'm holding 100 shares of this company, why don't I just do another cover call strategy? I'll power on this trade. If I'm holding this stock, I cannot sell it in the next 3 to 4 months for whatever reason. Maybe he's an employee of a company who is publicly traded. He cannot sell the shares because of, trading restrictions. To, offset any risk, he can buy a protective put, a put option, allowing him to sell the stock if ever the share price drops. So teaching people how to fish is the best way to go about these things. And what we saw and what we taught and what we see with retail investors is that they all know how to fish now. Back to you, Mark.
I like that. I'm going to have to borrow that from you, Richard. They all know how to fish now. Hopefully, at least a few of them are not wading in over their heads. One of the topics we always discuss at OIC, it seems like it comes up every year in my round robin of interviews, Richard, is the topic of extended trading hours. And we always ask our audience, what do you want us to ask? What do you want us to ask? And that topic always comes up, particularly for our U.S. audience here. They want to know why they can't trade options around the clock. Just that's a very frequent talking point. It seems like you folks over there at Montreal Exchange get a little bit ahead of the game. You're actually doing that now. You're extending your derivatives trading hours to 23 hours coming up in the second half of 2021. I'm curious for your perspective, Richard. Why did you make that change? What's going on behind the scenes to drive the 23-hour trading cycle there at the Montreal Exchange?
Yeah, Mark, that's right. And that's a good question and observation. And, the Montreal Exchange, we're very proud to extend trading hours so that international participants in Asia can trade during their time, as well as because capital markets today are becoming very connected, interconnected. So our clients wanted the ability to trade round the clock. So like that, they can better manage risk, overnight risk. They can diversify their portfolios into Canadian holdings and so on. But as you know, the extension of this trading hour has been already started since 2018. That was, I would say, phase one. Because phase one was to extend trading hours to meet client demand from Europe. That's where we started trading hours at 2 a.m. Eastern time. Now, phase two is to extend trading hours all the way out to Asia. This is phase two of the international plan. And this project is slated to be online in Q3 this year. Okay, so Q3 this year, participants and clients from Asia will be able to start trading at 8 p.m. Eastern time, all the way to the next trading day's regular session close. So this in total, it's going to be 20.5 hours in total. So if someone's sitting on the trade desk in HK, Hong Kong, he or she can start trading from 8 a.m. local time in Hong Kong. And these products are going to be, let me specify, it's going to be on the interest rate and index futures. We're going to start with these two categories first and see how that performs and what the volume it's going to generate, and then possibly look into offering other products such as equity options and so on. So again, Mark, keep an eye for the launch in Q3 this year. There's going to be lots of buzz around it. You're going to see lots of marketing campaigns, promotions talking about the 23-hour trading.
Well, Richard, I'm going to cheat here because most of our audience is in the U.S. We have listeners from all around the world, including in your neck of the woods in Canada. And we recently had a question from a Canadian listener that I'm going to put to you because you're far more well-versed in Canadian account types than I am, Richard. We had a question a little while ago about a listener who asked about an RRSP account, which to my knowledge is kind of like a Canadian equivalent of an IRA down here. And he wanted to know why he can't sell puts in an RRSP account. He says, I can trade covered calls, which, as we all know, is synthetically, from a risk perspective, the same thing. Yet, for whatever reason, his account prevented him from selling short puts, even cash secured short puts. I'm curious for you, Richard, I'm going to put you on the spot. Do you have any knowledge of these RRSP accounts? And can you tell our Canadian listeners any insight into why they could do a covered call, but not the risk equivalent cash secured put, sir?
Yes, Mark. And that is a very good question.
I knew you were the right guy to bring on today. I knew it.
No, but honestly, I get that all the time. And shorting puts and cash secured puts is exactly the same risk profile as a covered call strategy, right? Now, when investors trade in a registered, RRSP account, the CRA, okay, which is the similar as the one in the US, which is the IRA, okay, the Canadian Revenue Agency. Okay, we have to abide to their rules, and their rules stipulate that investors in a registered account can only purchase calls and puts, cover calls, and protective puts. You cannot do any other strategy aside from this until they change that rule. So for the time being, doing a short put or a cash secured put, or even a vertical for that matter, is not feasible in a registered account. It doesn't matter if it's a TFSA or RSP or RESP. Any registered account type cannot do any other option strategies than the ones that I mentioned. But for for Canadian investors who want to do a cash secured put or straddle iron condors, butterflies, spreads, they can do it in a margin option account. In those accounts, they'll be able to do a short put, no problems.
So they need a more traditional brokerage account as opposed to the retirement account. I just wanted to clarify that because I know we had a few Canadian listeners who were confused by that. Unfortunately, listeners, I don't have good news for you. It seems like that's just the way of the regulatory affairs up there for the time being. But hopefully they'll get that sorted out and they'll allow you to perhaps start doing some trades like a cash secured put. If you can do a covered call, you should definitely be able to do a cash secured put. Richard, I have another question for you here. One of the other hot areas of our network these days, we've added a crypto program a few years ago. Every Monday we do our crypto rundown program. And one of the interesting things that's been going on in the crypto space has been coming out of your neck of the woods in Canada. You guys, of course, were the first to approve a Bitcoin ETF. It is now trading. I do believe there are options trading on it as well. So this is certainly a hot area for a lot of our audience. They're championing the bit down here, Richard, to be able to trade options, certainly on a Bitcoin ETF. They can put that in a securities account. That would be a huge hit. Unfortunately, we're not there yet here in the US, but I'm curious, what are your thoughts on the crypto scene there in Canada? The potential it has to become an interesting new trading class and the prospect of trading options and derivatives on these products, Richard.
Yeah, that's right. But you know what? I don't know about you, Mark, but I've always been interested and very interested in buying myself some Bitcoin, even before this hype, before getting to like $55,000 a coin. But when I really started looking into it, I found that there were lots of barriers, like, for example, that prevented me from buying my first actual physical Bitcoin. For example, when you take a look at the news, when Mt. Gox got like a security breach and then they went bankrupt, disappeared overnight, and some investors losing their digital wallets or private keys, this is like kind of scary and daunting. So, me, I'm just like a regular investor who knows a thing or two about options, but I have no clue how to store my crypto, especially safely store my crypto. So that's why I never bought my first, actual physical Bitcoin. But then again, when the ETF manufacturers in Canada got the approval from Canadian regulators saying that they were able to list an ETF on Bitcoin, that was it. That was my chance. I was like, oh yeah, this is good. I'll be able to buy my first Bitcoin through an ETF. And just for the sake of the audience, I think you know this already. Canada is the first country to launch a traditional ETF. And now we are also the first to list a Bitcoin ETF. I think this is something that lots of Canadians are very proud of. And because of this, TMX was able and very lucky to be able to list also the first option on the Bitcoin ETF. So those Bitcoin ETFs right now, we have a few of them. But once you have one crypto ETF going, there are for sure going to be others coming on board, just like the Ether and so on. So all the cryptocurrencies are going to be popping up left and right. And once they have these ETFs on the different cryptocurrencies, guess what? We're going to be looking into listing options on these ETFs on cryptocurrencies. So keep an eye on them, Mark. So keep an eye on that.
Well, we'll definitely keep an eye on that, Richard. A lot of eyeballs are on that right now because, as I mentioned, that's kind of the holy grail. Folks being able to trade options on a listed ETF here in the U.S. They can put it in their securities account. They don't have to deal with kind of what you were talking about, the wallet, the headaches, the nonsense that have been barriers to not just people like yourself, Richard, but a lot of our listeners out there. They don't want to deal with that nonsense and custody and all that other stuff. They want to just have something they can put in their traditional securities account and trade options on it. So an ETF here in the U.S. would certainly be a game changer. Glad to see you guys are already taking the steps there. May have to sling a Canadian account for myself, Richard, just to start trading options on that ETF. But unfortunately, that music means we've come to the end of our time here today, Richard. But before we go, I always like to leave our audience wanting more. So if there's anything else you have up your sleeve, maybe a topic we didn't get a chance to talk about today you think would be interesting to our audience, or perhaps you want to leave our audience a bit of a hint, a bit of a tease of what's coming down the pike from you and the rest of the folks at the Montreal Exchange, now is the time, sir. The floor is yours.
Okay, so quickly, just one thing that I want to tell all your audience and followers is that we are hosting our Virtual Options Education Day this May, on May 31st. This is the TMX event that we'll be hosting for retail investors. It's going to be jam-packed with lots of options education. So if you want to sign up, it's a free event. It's on m-x.ca. So go to our website. You can register for free.
There you go. We love it. Education. Check out the Montreal Exchange site to learn more. We'll, of course, put it in the show notes, and we'll tweet out about this event as well. More education, always a good thing. Maybe you can ask them more about those RRSP accounts and why you can't trade the puts over there. I'm sure they'll be happy to answer those questions and a whole lot more. Unfortunately, that concludes our interview Tuesday for today, but don't worry, a lot more content coming at you throughout the rest of the week. You get a triple dose of content on Education Wednesday. Tomorrow, you get your usual options bootcamp and your options playbook radio, but also the advisor's option coming at you tomorrow as well with some great special guests. Going to do a deep dive into one of our favorites and very suitable strategy for the advisor audience. I call it the advisor holy grail. Yes, it's a covered call. Going to do a deep dive into that. Thursday, of course, back with TWIFO episode 2 of the Option Block, Friday Ball Views. And it kicks off again on Monday with the Option Block and the Crypto Rundown, all the way through to another interview Tuesday and another episode of Options Insider Radio.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.